Welcome to Yahoo Finance Live on this Friday afternoon. I'm Shauna Smith along with Dave Briggs. Let's get you up to speed on this afternoon's market action because you are looking at gains at least for the Dow. You have the Dow up just about 147 points. The Nasdaq, though, in negative territory, off just about 0.75%. You're looking at the S&P just holding on to gains, up about a tenth of a percent there. On a weekly basis, you are looking at the S&P here in the red. All three of the major averages lower for the week. The S&P having its worst week that we've seen since December, off just over 1%. The Dow now negative for the week, off just about 0.2%. Nasdaq off about 2.5%, the worst performer so far this week. Taking a look at the sector action here. For today, we're seeing some green on the screen. Energy, the leader, utilities also up just about 2%. On the flip side, you're looking at discretionary communication services among the worst performers. But on a weekly basis, looking at energy, the only sector holding on to gains. And look at that, a jump of just about 5%. On the flip side, you're looking at communication services off about 5.5%, Dave.
Thank you, my friend.
Thank you.
Got the black memo?
We do. We're matching. Twins here.
Well done. All right, let's get you up to speed now on the Lyft crash. A tough day for the ride-sharing company. A brutal day. The stock tanking more than 30% after they posted disappointing earnings and issued weak guidance for the next quarter. Lyft seeing a $2.1 billion market cap loss since yesterday's close. Just devastating. The street appears bearish. Take a look at some of the analyst downgrades here for Lyft. Right now you have on your screen Citi, neutral. Another neutral, two holds, Truist downgrading from buy. Just say bye-bye to the buy rating essentially is what we're seeing, Shauna. It is ugly across this board. It
is very ugly across the board, and I think it's very hard at this point to make the bull case for Lyft, especially when you compare the numbers that we got last night to what we heard from Uber not too long ago. I mean, when you compare those two, it's hard really to make a case of how Lyft is really going to stay remotely competitive to Uber going forward, what the future looks like. I think these numbers really started that conversation too, just about what would be the best option here going forward for Lyft.
It's just so amazing how fast this story turned south essentially overnight, because they had been essentially together. I mean, not totally locked the way cruise stocks are, but right around this earnings report, things just went in opposite directions. Let's check out some of the price target slashes as well. We told you about the downgrades, but also analysts cutting their price target. And look at the first one. I mean, you're talking, that's not a price cut. That is just taking a hatchet to it. To 14, I don't know how it was at 40, but that is what it is. And then across the line, all 6 analysts here cutting the price target. Just so many differences between these two companies, which is interesting because as we've talked about often on this program, most people we know get on the app and have both apps side by side and compare price targets, but they look like vastly different companies heading in opposite directions. And what are the reasons really? So I guess you've got Lyft really is a US-based company. Uber is international. Uber has obviously the Eat side. Lyft does not. But what else do you think is?
Yeah, and I also think the other case for that is that Lyft is just over-indexed to the West Coast. That's really where they get the majority of their riders. Yeah. They don't have the presence that they need just because they are a domestic-based company across the country, which I think has clearly been a big headwind for that company. Well, we were just talking about the downgrades, the price target cuts. One of the firms downgrading Lyft today is Wedbush. Now, in a note to clients, a firm writing Lyft, quote, faces an Everest-like uphill climb. Joining us now is the analyst behind that call. We want to bring in Dan Ives, the Wedbush Managing Director and Senior Equity Analyst. Dan, it's great to have you there.
Jersey,
there you
brother.
go, the Eagles jersey. I love it. Go Birds.
Miles Sanders fly, Eagles fly.
I know, but we can do the chant at the end
Dan,
of the interview.
You can lose the sport coat, brother. Just show the jersey, man. I mean, you have permission.
All right, Dan, let's talk about Lyft. We got to get to the business part of it, and then we got to have some fun here. Right? You're downgrading the stock from outperform. You downgraded it to neutral, cut your price target to $13 a share. Now, in your note, you say that in 22 years on the street, you've listened to thousands of conference calls, earnings calls, and, quote, last night's Lyft call was a top 3 worst call you've ever heard. Why?
Well, I mean, it was an embarrassment. I mean, this is a management team that feels like they're playing darts blindfolded in terms of trying to figure out how they're going to get the profitability, what the strategy is. And that's why I think investors came off. I mean, this is a name besides just being a little brother to Uber, it just shows that I think the business model has some significant uphill climb in terms of what the future is. And I was just going to, on Amazon, send a compass to the Lyft management team.
Wow, solid. Okay, Lyft CEO Logan Green discussed the company's Q1 outlook on that call that you so loved. Let's listen to a clip here.
We expect this will result in Q1 adjusted EBITDA between 5 and 15 million. This is obviously not the level of growth or profitability we are aiming for or capable of, and we are laser focused on driving additional growth and managing costs. Relative to 3 months ago, the competitive dynamics changed, and the better marketplace balance we see today creates significant opportunities for long-term growth.
All right, we'll dive more into the numbers, but what so turned you off about this call?
Well, there's no strategy. In other words, how are you going to do that profitably? And how could Uber, and a clearly different levers globally and as well as delivery, be in such a different situation than Lyft? Essentially, there's adults in the room at Uber, and there aren't any at Lyft. And that's the biggest problem here. The street, especially in this macro, I mean, they're going to throw this out the window. And I think outside of M&A, that would be the best case, which I think there's far and few between. But then strategically, what's the path here? Where is Lyft in 2-3 years? That's why, as an analyst, I listened to that conference call. That was a Friday the 13th nightmare for anyone. You cannot come out of that bullish.
Friday the 13th nightmare. I love that, Dan. When you talk about M&A, that might be the most likely, or what you think would be the smartest, maybe path forward is a better way to put it, for Lyft at this point. Who do you think would be a potential buyer? And I know you kind of alluded to this, but do you think there's any appetite out there for Lyft right now?
Look, I don't think necessarily the appetite, and also if you're a buyer out there, you'll wait for this stock to just continue to move down and wait for that board to take the phone call. I think it would probably be a financial buyer. If I was thinking about it, that could basically just crush costs and ultimately integrate this. There is clearly an install base and ecosystem that you could tap into, but that's the shame. Look, 24 hours ago, we had hopes that Lyft would be able to get through this profitably, understand the market, make the tough decisions. Instead, it was almost just a call. You came out of there feeling like, they don't really understand the strategy. And it's hard for any investor to have faith in that. And it contrasts so dramatically with Uber. And I think that it's just a startling change between those two.
So who would be a sector fit in terms of complementary, what they like to do, if that stock falls enough? Would it be a travel company? Would it be a tech company? Would it be a Tesla type company?
Yeah, I don't necessarily think domestic. It would have to be an international player that plays an overall gig ride sharing, that's looking to potentially get into the U.S. And they would, and that would obviously be Lyft with a duopoly, and it would give them some sort of spear to get into the market. I think that from a strategic would probably be best case. But right now, look, they're basically hoping for a glass slipper situation. Ultimately, they basically stumbled in a market where they had the opportunity. And I think that's what the frustration you're seeing with so many analysts that have downgraded because of that call. You came out of that call, really feeling like this is a company that needs a compass.
Well, Dan, there was maybe a silver lining in this report, if we could call it that, with active riders at just around 20.3 million, was flat quarter over quarter, but still up nearly 9% year over year. Does that give you any hope for Lyft?
Well, I think that's the frustration, is that ridership stabilized. Those are good metrics. But if you can't do it profitably in this market, that and $3 gets you a cup of coffee. And I think that's part of the problem here, is that you got to do it profitably. And then you look at Uber, there's definitely share shifts going over there. And that's why I think Uber's watching this report, popping the champagne, because I think there's just, it's a winner take all. And really, Dara, you got to give credit, to what Uber's done. And that's why, in my opinion, to play ride sharing, you have to play Uber now. Lyft, it's almost best days are clearly in the rearview mirror.
Well, you mentioned Dara. It worked for the Eagles. They got Sirianni, turned this team around. Is it time for a new head coach at Lyft?
Look, I mean, I think the Eagles, after winning the Super Bowl Sunday, maybe should go in there as some motivational speakers. And I think, look, I think this is there's some darker days ahead here for Lyft, especially with a conference call like that.
All right, Dan, we will see you back here in a little bit. We want to talk a little Super Bowl. We don't have to ask you who you like in this game. That is clearly on display, but we will see you in a little bit. We'll also talk about Apple as well. Let's get up to speed now with energy. Russia announcing they're cutting oil output in retaliation for Western sanctions. Jared Blickery here to break down that move. Jared, what are we seeing?
That's right. Oil, actually energy, the biggest performing and the greatest performing sector today. It's on the back of WTI crude oil futures. This is a chart going back 5 days, and this big spike up here is the announcement this morning that Russia is going to be cutting 500,000 barrels a day from its production capacity next month. That's coming from a level of over 10 million. So we're talking roughly about, what is that, 25% right there. Now, let me take a look at the energy sector. As I said, it's leading today. It's also been leading this week. Let me show you the 5-day performance. This is now tech really taking its first dose of medicine this year, and you can see energy outperforming. This reminds me of the last year because look at this. Energy vastly outperforming everything else. Most of these other green stocks, ETFs barely green right here, and here's what happened over the last 2 years. XLE up 100%. So let's move to our energy board and just see what's going on here. Here's what's going on today. Exxon up another 4%. Now, we've had a lot of these, all the oil majors have released their earnings now, and a common theme is a return of shareholder capital along with record profits. Let me show you what has gone on with Exxon, and I prepared this last week, but I want to show it once more. Exxon is raking in record cash. This is a political football right now, and they are number 8 on this list here. You can see Apple dominating that list with $122 billion over the last year. That was in 2022. Exxon, a bit less than that, 50 billion, less than that, 76, but still, you can see where this is going. Now, let me show you what, let me get back to our heat map here and just talk about some of the other oil majors. Now, Chevron just announced a buyback of $75 billion. It caused so much controversy that the CEO had to come and say it was overblown, but you take a look at Chevron, it's up 86% over the last 2 years. If in fact, now here's another thesis, if in fact growth is slowing once again, we're seeing the Nasdaq turn down, guess what? Energy might be outperforming. So I think those are the dynamics in play. Want to keep watching energy. It was the leader last year, and it may be this year again.
Certainly very important to keep an eye on. All right, Jared Blickery, thanks so much. We are just getting started here on Yahoo Finance Live. Coming up, major companies like Disney, Salesforce have been dealing with activist investors. We will take a look at what that means for shareholders. Then we're talking Bidenomics. We will tell you why the president and the American public don't seem to be on the same page about his economic agenda. And Super Bowl Sunday is almost here. Our big game coverage kicks off at 4 p.m. Eastern time today. We'll dive into everything from sports betting to ad spending and even get into some prop bets. You don't want to miss it. Earnings season so far has painted a mixed picture on the consumer, but new data out from Bank of America showing that spending is actually off to a stronger start this year. Credit and debit card spending was up in January, growth of about 5% from the numbers that we saw a year ago. So for more on that, we want to bring in Ann Berry, founder of Threadneedle Ventures. And I think a lot of people, when they're trying to figure out whether or not the rally that we've seen since the start of the year, if that's going to continue, hinges on the consumer, the strength of the consumer at this point. What do you think?
If it does, I'm really nervous because I think this consumer buoyancy, the way in which the data is being read is really positive. It's the positive spin. Credit card spending's up. You know what it also means? The consumer's taking out more debt. And what I worry about is savings draw down for the rest of this year and that debt load is going up. I don't think it ends very well for the consumer towards the end of this 2020.
Is there data showing that concern in terms of debt? Because, I mean, yes, to your point, the credit debit spend is how they're lopping it together, 5.1% increase versus 2.2% in the prior month. Isn't the consumer just in better shape than we thought?
Well, first of all, that number excludes BNPL, right, which is a whole category that no one talks about, which is another form of consumer debt. Small relative to credit card debt.
Very small and shrinking.
But it popped over the holiday season. When you looked at holiday spending, it became, a little bit more significant. Other kinds of data, record numbers of consumers are tapping their 401k right now to pay for medical emergencies and to pay for mortgages. So not every consumer is the same, and I think the hardest hit, as always, are the ones with very limited savings.
What about earnings season so far, just given the state of the consumer? I mean, look at consumer staples. We're hearing a bit of a mixed picture just in terms of sometimes consumers are willing to pay those higher prices that companies have raised over the last couple of quarters versus other names, some in the luxury space, that are starting to see a bit of a backlash. People simply aren't spending. What's been your takeaway from earnings season so far?
Well, on the consumer side, it's interesting. Luxury really held up as you looked at it over the last couple of years. Two areas tend to do well when the consumer's under pressure. Luxury, because the very wealthy tend to be insulated from some of these macro forces, and then value, the Walmarts, the Costcos tend to do very well in these periods. I think we've seen that. I think luxury paring back makes sense, but I think we're going to see value continue to do quite well.
When you look at a company like Pepsi, we've seen them increase prices beyond the rate of inflation. And what they're seeing is demand has dropped a little bit and volume has dropped a little bit, but those price hikes have more than made up for it. So they have no reason to lower prices. What does that mean for the Fed?
Yeah, I don't think prices are going backwards, by the way. And Chipotle, I think it was Chipotle who came out and said, we hiked up prices. They're not going to go up anymore, but they're not coming down either.
Right.
So, and that's important. Inflation is the rate of increase. So I think as long as we see the increases stop, things can start to stay still. That makes the Fed's life easier. But I don't think we've stopped seeing companies put up their prices yet behind the excuse of ongoing inflation. That cycle's got to break. It's not broken yet.
So what does that mean then for equities? Because if you at least look since the start of the year, we're off to a strong start with the S&P and the Nasdaq. Can we continue that momentum if we don't see substantial improvement in inflation?
I don't think so, because we know that the Fed's been super clear, and I'm actually a little bit confused by what's happened in the market. Jay Powell was super clear. Rates are going to continue to go up because inflation has not yet come to the point where it needs to come. I just think the sentiment is baked in right now. I think investors are excited to finally see companies come up with plans. Dan Ives just said, here's what was disappointing about Lyft. Crickets, there's no strategy. We don't know what execution is going to be. This earnings season, we have seen companies come out with real plans, with concrete paths towards profitability. I think that's why you see a relatively strong market, but I don't understand it in a macro sense.
In some cases, those plans are being forced by activist investors. There's been a real increased trend. So we started with Blackwell's Capital on Peloton. We had Nelson Peltz, who says that is over in regard to Disney. Elliott Management in Third Point with Salesforce. Ryan Cohen with Nordstrom. This is just to mention a few. Is there a common thread here amongst all these activist investor moves we're seeing?
Well, you've mentioned the ones that have actually affected change. Some of the activists come in, they have change, they don't have change. What's so interesting to me about Disney and now Salesforce, these are businesses with huge amounts of stickiness, with really strong brands, which have historically had, pretty good response to their management teams. And yet these activists are coming and saying, no, we're finding things for you to do. And so what I find interesting about this is they're succeeding in getting change. And it's also raising a broader question of why aren't these teams figuring this out themselves before the activists come in?
You see the skepticism on my face, and that's because Nelson Peltz.
Tell me about why are you skeptical about Nelson Peltz?
What did he do there? He didn't affect any change. Bob Iger was going to do this with or without Nelson Peltz.
How do we know that?
He took a victory that he had nothing to do with.
I don't
He
remember.
wanted a board seat, and they ignored him.
They
said, sit over there in the corner.
I feel the heat. This is great. When did Bob Iger specifically come out and
He's
say...
been on the job 2 months.
But he didn't come out and say, I'm going to take $3 billion of cost out until Nelson Peltz came out and said, here's what the activists do. And this is what happened with Peloton. Here is a really specific plan with specific actions I want this management team to come up with. Bob Iger came back. I rang the victory lap. I'm a retail, full disclosure shareholder in Disney. When he came back, I was thrilled, right? But he didn't have a plan. He didn't have anything specific until he was, to your point, a little bit of time in the seat.
You don't think those things were already in motion? You don't think that was Bob Iger's plan? And by the way, the dividend, we don't know how much it is. It was a modest dividend at a later date.
If what Nelson Peltz did was force communication with the market, so we went from perhaps something is on the come to here's now something specific that we can hang our hat on when it comes to actual earnings forecasts and the outlook. From a shareholder perspective, I like that.
Sorry to hijack the comment.
Yeah, I was going to say, how do you look at it, though, from an investor's perspective, right? If there is activist investor involvement, is that an opportunity then, do you think, to get in and buy some of these stocks?
So it really depends. And to go back to the Disney example, because it's so much fun that we get so riled up about it. Okay, here's why I like that situation. Again, it was about specifics. This was the same with Peloton. Here's a very specific plan. It was very analytical, it was very rigorous, and it was very operationally focused. That I like, because then you've got a CEO who's able to respond to something specific. What I don't like as a shareholder is if an activist turns up, makes a bunch of noise, doesn't have something specific to respond to, then that's a distraction for the management team, and that is actually not good for the shareholder. So there are different kinds of approaches to
So
that.
like Ryan Cohen and Alibaba, that one doesn't make any sense to me. You're dealing with the Chinese government. How are you going to enact change?
Well, in that case, and I'm not in Alibaba, that's where I would say that falls in the bucket of saber rattling, and then it's just going to be one more thing for a CEO to deal with other than creating value.
I guess I'm just saying, I think like Barry McCarthy deserves more credit too in the case of Peloton. He came in, he's been trying everything since starting there, only been on the job about a year.
Yep.
I'll stop my rant, but it was a good discussion. Good back and forth.
It's a great discussion.
But as a great CFO, he's a CFO. He's a capital allocator. That was his superpower.
Well, they certainly are. We're seeing a change at a number of these companies. And Barry, always great to have you. Thanks so much for coming on the studio for us. All right, well, coming up next, Biden's big plans. The president has a lot on his 2023 checklist, but most Americans may not really care. We'll explain why next.
President Biden laid out some big plans in his State of the Union address this week at a pretty lackluster response. According to a CNN poll, fewer Americans had, quote, very positive feelings about Biden's speech than the last three presidents. Yahoo Finance senior columnist Rick Newman here with why. Rick, always good to see you, sir. So why do you think most Americans don't care about Biden's plans? I gotta say, I thought he did a fantastic job with that speech. Energy, passion, he was bringing it.
Well, you said Biden introduced some big plans. He also introduced some small plans. I mean, the newest thing in his speech, I think, was this focus on junk fees. You know, hotels charge you something called a resort fee. It's a tack onto your bill, other things like that. Okay, that's an irritant. That's a nuisance. But is this really what he's going to base his 2024 presidential campaign on, assuming he wins? You know, we've seen a lot of data showing people don't even know what Biden has accomplished during the last 2 years, and he has signed a lot of important bills. They don't really know what he stands for the next 2 years. And there's a real disconnect here. I'm a bit puzzled by it, honestly, because we have super low unemployment. Inflation clearly is bumming people out. You guys were talking about that just a moment ago. People just are not giving Biden credit for anything at the moment. So the question is Biden doing a better job than voters seem to think, or is Biden simply out of touch with voters who are in a very sour mood? And on that last point, I didn't see anything on Tuesday that indicated Biden has figured out what the heck is going on with voters. Why are they so bummed out? Why are they so pissed off? So is he going to be able to rally for the next 2 years? I know people thought it was a good speech on Tuesday. I didn't see anything that said to me that Biden is really going to get people fired up during the next 2 years. And I think that's a bad sign if he really does run for re-election in 2024.
Well, Ricky clearly has a messaging issue. If you are advising Biden, you obviously know in and out of what the presidency has been the last 2 years. What does that message then need to be ahead of 2024?
So one of the things Biden talked a lot about in his speech at the State of the Union was he kept talking about my plan, my plan. Well, many elements of his plan are things that have been part of his plan for the next 2 years, and Democrats couldn't even pass them when Democrats controlled both houses of Congress. So there wasn't enough voter pressure on Democrats when they had the power to pass these Democratic priorities. And I'm talking about things like it's mostly social welfare programs. It's Biden wants free preschool for 3- and 4-year-olds. He wants free community college for 2 years for people who qualify. He wants to extend the child tax credit, which Congress couldn't do. They tried to do that. Remember the Build Back Better, the big program that failed in 2021? The reason it failed is there was no voter uprising saying, yes, we really want all these social welfare programs now that they're in place. So Biden keeps talking about them. But look, this did not get traction even with a lot of Democrats. So these might be worthwhile programs, some of them, but voters, and especially independent voters, don't want them. That is not what voters want. It was very clear during the last 2 years they don't want them. And to me, Biden is just trying to sell us the same failed policies that he could not get through Congress. Now, he did get some things through Congress. Maybe he should be focusing that type of stuff, and that type of stuff is more moderate, and that's what will appeal to independents.
I'd agree with you in terms of laying out his plan. When I say I thought he did a great job in selling his accomplishments and the state of the economy, that first 20 or 30 minutes, he came out pretty strong in selling the true shape. He can't do much about inflation. That is not Biden's problem. It is not something he caused. It is something people are going to blame on him. If you were advising the Biden administration, what would you lay out as something that might resonate with the American public? Would it be the infrastructure, which really hasn't been spent yet?
Well, he's doing all that, and he's going to keep doing that because Biden knows that he's not going to get any legislation through Congress during the next 2 years since Republicans control the House, and they will block it. So he's already been going around saying, we're opening this bridge, this tunnel, this road. He made a joke about it. He's going to be at all these groundbreakings during the next 2 years, even in Republican districts. Maybe if I were Biden, he has to keep talking up the good things that have happened during the last 2 years. I think he needs to do more to indicate that he gets how big a problem inflation still is for people. And even if, I mean, we know inflation is coming down and it's probably going to come down more. And some of the things that used to be too expensive are coming back in line, such as gasoline prices. But people still seem scarred by the inflation they've seen during the last years. And I don't have a complete handle on that, Dave. I'm not there. I mean, there's a real disconnect here between what the data shows us about the economy and consumer confidence levels. And the most notable thing I saw this week in the economy was a new Gallup survey that showed the highest portion of people since the middle of the Great Recession say they are worse off a year ago. And that is up almost 10 points from the same point in early 2022. Yeah. If I were Biden, I would ask my economic advisors, what is going on there? Why are people so bummed out? I need to find out what people are really upset about and start addressing that, because I don't think he's addressing whatever is really bothering people. Yeah. He is not talking them into believing that the economy is good.
Not a good salesman, and his administration is not good at selling their accomplishments. I want to ask you, and he's going to be 82 in 2024. Yep. A lot of reasons they got to look for somebody on the bench. Interesting news from Florida that Disney now, as far as that special tax district, Ron DeSantis has been trying to get a change here. So they're going to have a special board that's going to oversee that special district. So essentially, Ron DeSantis will control that board that oversees Disney and put his thumb on them if they speak out against any social issues. Where is this headed, and is this a national issue that could catapult Ron DeSantis further on the national stage in regard to 24 and ambitions?
It seems completely clear that that's what he's trying to do. By coincidence, I was just in Florida during the last 2 days. I just got back this morning. And a lot of people in Florida are talking about what in the world is DeSantis up to? They're even wondering this in Florida. So this is all about social issues, and Disney opposed his education bill, where the so-called Don't Say Gay bill. You know, he's doing this other thing where he's taking over the curriculum of a popular college down there. And he's basically saying, no, you can't do all this liberal arts stuff. He wants to turn it into like a Christian college. Even voters in Florida are wondering why in the world is he doing this, and he's very popular there. So it's a test bed to see if this plays on the national stage. We'll find out, I have a feeling, within the next 2 years.
Yeah, can't help but wonder if there's a Pence, Haley, Pompeo lane opening here with Trump and DeSantis carving out their own path. But we shall see, Rick. A lot of time between now and then. Enjoy the Super Bowl. Who you got, by the way, Chiefs or Eagles?
I just want to see a good game. And it depends where my numbers come out on the
He's
square.
a punter. He's a punter.
Come on, Rick. Come on.
All right. And I'll tell you what I want to see.
All right, Rick. Coming up, we're just an hour away from our big game coverage. We'll dive into everything from sports betting to ad spending and even get into some prop bets as well. Here's everything you need to know about the big game.
The Super Bowl is this Sunday, and we are breaking down the numbers ahead of the big game. Here's what you need to know. The NFL's Kansas City Chiefs are set to face off against the Philadelphia Eagles in the Super Bowl this Sunday. The league is expecting a massive TV audience this year. Variety predicting that the game is going to draw more than 100 million viewers for the first time since 2018. The game is being televised live on Fox as part of the network's rotating TV agreement with the NFL. Back in 2011, the big three TV networks all signed a 9-year, $27 billion deal for the rights to air NFL football games, including 3 Super Bowls apiece. In today's dollars, now that is a steal, with Fox charging advertisers between $6 and $7 million for a 30-second ad during this year's game. But Fox is not the only one to bring in the big bucks this Sunday. The average ticket price to see the game in person has fluctuated between $6,000 and $10,000 over the past week. Although a majority of the ticket proceeds go to the two teams playing in the game, the sheer magnitude of this event brings in a great deal of cash to its host city as well. Tens of thousands of people, including players, fans, and media, will all converge onto Glendale, Arizona for a weekend of football-centered events, culminating on Sunday for Super Bowl 57. It's Glendale's second Super Bowl in 10 years, and although hosting can be a logistical headache, the event will bring in millions of dollars for the city's restaurants, hotels, and other businesses. It's time for a triple play. 3 stocks that we're watching in the final 20 minutes of trading. We've got Yelp, Expedia, and Diageo. All right, my pick today is Yelp. Shares are moving to the upside after the company's fourth quarter revenue jumped 13% from a year ago. You're looking at gains of just about 4%. Well, that actually topped the street's expectations. Now analysts are weighing in. JP Morgan saying that its ad business is showing, quote, resilience, while Evercore ISI writing in a note to clients that, quote, the fundamentals are holding up relatively well despite that current economic environment. Yelp is faring much better than others that are reliant on their ad businesses. Both Meta and Google's Q4 revenue, that dropped about 4% year over year. And Ali, this really points to the fact that people are spending, and when they are spending, a lot of them are spending it on experiences. Yelp, obviously a beneficiary there just in terms of the traffic that they're seeing on their site, and they're able to still generate those ads.
Yeah, and on the ad front, Yelp CFO gave an interview to Barron's and said that they're actually seeing strong demand in home service providers. So electricians, plumbers, landscapers, and I think that differentiating factor, focusing more on the services side of the economy versus a big corporation like Meta, that is huge moving forward. That makes up 60% of their ad dollars. And if you're a mom and pop electrical contracting shop, you're trying to make up for those pandemic losses. You're trying to stay busy. One way to do that is just run a bunch of ads on Yelp. So this makes sense to me. And another thing that I thought was interesting about Yelp is that last year they increased their headcount by 500 people. They said this year hiring will likely remain flat. But the fact that they're not leaning into layoffs, and we've seen a lot of companies do that, it's just one way that they're able to weather that storm. But there is one company not weathering the storm quite literally, and that is Expedia. Shares are down a whopping 9% after the company reported an earnings miss driven by bad weather. The company did say a January surge in bookings points to future upside, and Wall Street analysts seem fairly confident that that positive 2023 guidance will be enough to make up for the disappointing Q4 results. But it is interesting to also see Airbnb shares trading to the downside today on the heels of Expedia's miss. The New York Times was actually out with an article about how short-term rentals, they're fumbling ahead of the Super Bowl in Phoenix in particular due to the high demand that we've seen in a lot of these different travel companies. I don't know if you guys have noticed that.
No.
I think there is a lot of competition.
Just specifically in Arizona.
Specifically in Phoenix for the Super Bowl, a lot of these people bought homes in 2021 thinking, oh, I'm going to make like 10 grand a night for the Super Bowl. But now there's just so much competition in the short-term rental market that could be another headwind for some of these travel stocks.
There's also so much building in the Arizona area. And if you haven't been to a Super Bowl in Arizona, which I have a couple of times, it's a massive area. You're talking about an hour between the stadium and Tempe and Phoenix. There's just a huge, enormous swath of area. You do well when the Super Bowl city is a smaller, concentrated area. So that's, in particular, I think, what's happening there. But I read through the transcript of the earnings call when it comes to Expedia, and the word that came up at least a dozen times was their loyalty members. Their CEO, Peter Kern, said they entered 23 with 70% more active loyalty members than any prior year, and that's who they monetize the most. So they're very excited about that number. Speaking of excited, I'm always excited to talk spirits. My play is Diageo, who owns brands such as Tanqueray Gin, Johnnie Walker Scotch, Don Julio Tequila, and Kettle One Vodka. Shares for the most part flat today, but spirits overall are spiking. For the first time ever, spirits have overtaken beer in the alcoholic beverage market. That's major. Data from the Distilled Spirits Council shows spirits have a 42.1 share to beer's 41.9, so it's very close, but they did eclipse them. Where they're headed is the key here. For context, in 1999, beer had 56% of the market against 28% for spirits. So headed in the opposite direction quickly. You'll see plenty of beer ads meanwhile on Sunday, but spirits also made the big game. Diageo has a Crown Royal ad starring the Foo Fighters' Dave Grohl, also an ad for the House of Remy Martin. Diageo shares fractionally down today, down around 3% this year, but that really tells you a lot about the momentum of the spirits industry. It's odd, though, because the only one that really is growing exponentially is tequila. The other ones are relatively flat, small single-digit gains, where tequila has been a rocket ship.
Yeah, that certainly has been driving the gains as of late. When you take a look at how popular spirits are today compared to what we've seen in the past, they've actually been steadily increasing their market share for the past 13 years in a row. So this momentum has certainly started a while ago and seems to be carrying through here. I wonder how much the younger generation has to play with this, just in terms of their preference for more options. They love the canned cocktail. I know we're not specifically talking about that with Diageo, but certainly the rise of popularity of that helping the spirit business overall. And we're seeing that reflected in these numbers.
We've got a young person.
Oh, yeah.
You're both young people.
I'm a Kettle One girl through and through. I've always been. I love Kettle One. But my friends, I've noticed an uptick in tequila in particular.
Yeah.
I just think it's branded as the healthier choice too. And I know wellness has sort of been a big trend over the past decade or so that could play into it. But I'm happy spirits is making a comeback. I prefer it to beer.
I'm Tito's, and I know Dave hates Tito's. Right?
That's not true.
I didn't think you were a big Tito's fan.
I like
All right,
Tito's.
I stand corrected.
He's an equal
I stand corrected.
That is true.
There you go.
I'm a tequila man, quite frankly.
All right, well, coming up, planning for retirement. You won't believe how much money Gen Z and millennials need to save to retire comfortably. We will tell you the eye-popping amount on the other side of the break.
All right, time now to talk about getting retirement ready, brought to you by Fidelity Investments. For years, we've heard that the goal for retirement savings is $1 million, but WealthCare Financial's recent analysis shows that with cost of living on the rise, Gen Z and millennials will have to triple that. Joining us now is Sean Tarzi, WealthCare Financial Managing Partner. Sean, if Gen Z needs to save $3 million, how much do they need to have to save every year?
Well, it depends on, when they start, how much they already have, but just want to start by saying thank you guys for having me on. But when it comes to what they need to be saving, it depends. So if we're starting like with a 30-year-old, they should be probably saving close to, $580, $600 at least a month. And that's if they're going to earn a high rate of return. So it depends on how aggressive and risky that they're looking to be. So it really is a trick question as far as like, how do we get to that $3 million mark? And for some people, it's $3 million. And I would say that's the median amount. Some people may need less. Some people may need more. So there's a lot of different things that we have to look into when we're talking about retirement and planning for the future.
Well, Sean, speaking of less, there's data out from Vanguard saying that the average 24 to 35-year-old has just over $14,000 in savings, clearly much lower if they want to get to that $3 million number. If you're one of those people, how do you catch up?
So I typically see when it comes to the younger population that we work with, they usually don't have as much. So what will end up having to happen is as they get older, they're going to hit some milestones. So typically most people don't hit their high income potential until they're in their 45, 55 range. And that's typically maybe they'll also become empty nesters. And that's when they're really going to be able to front load a lot of that additional money that they need to hit those numbers. So I agree. It is a lot of people that are a little bit further away from that goal. But there's a lot of different things that are going on, especially with the Secure Act that was passed last year in December. So basically some of those things that they've discussed are allowing people to pay their student loans off, and the employer's match will go into the Roth, into their bucket. Also, if people are looking to do Roth contributions, the employer can now match into the Roth vehicle. And there's other things that they are looking to do, such as 529 plan conversions into a Roth, to help a lot of the younger generation to get to that goal and to get to retirement.
Life expectancy also dramatically increasing. Gen Z has a higher chance of living to 100 than we certainly did. How does living longer factor into the equation?
It plays a huge factor. So these individuals that we're looking to plan for, back in the day, we would plan for, 15, 20 years. Now we're looking at 20, 30, potentially even 40 years, depending upon when they're retiring. So we need to make sure that they have enough money saved. We also have to look at a withdrawal rate, which is the rate of the amount of money that we're going to be pulling from our investment vehicle, at the same time as how much are we making every year to say, are we going to run out of money at a certain point in time? So there's typically a sweet spot when we're sitting with individuals that we kind of will look to uncover as far as how much they need to be pulling, so this way they can make their money last a very long time. So it's not a matter of how much am I putting away, it's how much am I pulling out as well, as a very important question to ask, as well as where is it invested and how is it going to be taxed when I get to retirement? Because taxes play a huge role right now when people are earning their income, and it plays a big role when we're working with people that are retired.
Sean, so there certainly is one part of this that people are going to be living longer. They are living longer today than they were in the past, but also just in terms of the younger generation, we've seen this rise in the gig economy. How has that, from your perspective, affected retirement savings? And what would your advice be to those out there that maybe aren't putting away anything because they're involved in the gig economy?
So I think that all people should be putting some sort of money away, whether it's in a retirement account, in a bank account, in an investment account. They need to be starting to do some type of retirement funding, investing, to get to those goals, whether it's that they want to take a 5-year hiatus when they're in their 40s and then get back on the horse and start working again. So I just think that getting additional money put somewhere is where we usually like to see a lot of our clients. Now, the other thing is making sure that we look at where are we spending, especially with the way that things are nowadays. It's so much easier for people just to spend and not realize that they're spending a lot of their money. So one thing that we typically look and go through when working with these generations is we'll go through where is their income going. There's 3 places. It's going to either go to taxes, it's going to go to expenses, and it's definitely going to have to go to the other portion, which we've discussed with savings. So those are the 3 areas. So typically, if we have 2 of the 3, we could always figure out how much money that they're spending and where is it going. And from there, we could typically look at budgeting and figuring out what can we cut and where can we add.
Good stuff. Appreciate all the tips there. Sean Tarzi, WealthCare Financial Managing Partner. Appreciate that. Coming up, the countdown is on to Super Bowl 57. We'll talk everything from the big money bets to the cost of your chicken wings and our big game special. But first, we are counting down to the closing bell on Wall Street. Stay with us here on Yahoo Finance Live.
Let's take a look at shares of Honda right now, up just about 2% as we enter the final minutes of trading. The company reporting fiscal Q3 earnings. Pros, taking a look at the stock's reaction. The street is pretty pleased, and the numbers were strong this past quarter.
Yeah, strong quarter for Honda. Follows Toyota's strong numbers as well. They saw revenue up 20% for the quarter and profit up 27% for fiscal Q3, which is their fiscal quarter here. So good news there. They're initiating a buyback of around $550 million. So that's kind of, as an investor, you want to see that. But, a little bit of bad news here. They did say that their fiscal sales forecast would come down a bit to 3.8 million vehicles because of the chip shortage still lingering, still happening. But they do see it ending by the end of 2023. So looking good here. New Accord out, new Civic out. But those EVs are still a bit a ways away.
All right, this next story blew my mind because I grew up always wanting a Jeep Wrangler, and that used to be a pretty affordable car. 30s.
Yeah.
And now they are unveiling a $100,000 plus Jeep Wrangler. Is it made of gold? What in the world puts this thing into six figures?
Well, they're showing some classic, there we go, there it is. It's the Rubicon 392 20th anniversary edition with special parts from AEV, an outfitter that does like high-end off-road components. So this car has a 392 Hemi V8 in it, the special components, only, like I said, limited edition. Over $100,000. I mean, I'm shocked, but people are buying special editions. People like to buy Jeeps and customize them, add all kinds of stuff to them. So, Jeep's like, you want to customize? We'll do it for you, add them on for you, and charge you a price.
I would love to know who's paying over $100,000 for a Jeep Wrangler.
Well, and who needs a V8 Hemi in a car that's so small? That would seem like a really odd mismatch.
Dude, that's
in terms
awesome.
of the power, wouldn't it?
No, the power's amazing. I mean, this thing is going to be off-roading, going over all kinds of stuff, terrain, rocks.
You got to get your hands on it.
Yeah, I do. Oh yeah, maybe we'll bring it over here. Yeah, but I think, Dave, I'm with you. The price is crazy, but it's going to be a really capable beast.
They're making only 150 of them,
Correct.
so they're really aiming at those people that want to say they have something different, something exclusive, something no one else can have. All right, let me look at the interior there.
I was going to say, you said that you wanted one when you were younger.
Always.
Do you still want one?
Yes.
Not the $100,000 one, the one that's a little bit more affordable.
Jeeps are the most fun. Take the doors off, take the top off. I mean, it's just such a wonderful.
I don't dig the doors off. I don't get that.
It's just the
open
open air.
Throwy for me.
Someone hits you to the side, you have no door to protect.
You can even drop the windshield down, so you can just have all the sunglasses and wind in the hair, I can see Dave. Dave's a Jeep guy.
Hold on. Now listen, I know we got to go to more important things. Jeeps, every dude my age buys a Jeep because they have a midlife crisis. Won't I be midlife crisis guy?
You might, especially if you buy a red one, which we just had on the screen 2 seconds ago.
You'd be
that is clear midlife crisis. That's when you've peaked. So you never know.
Ross, thank you, brother.
Yep.
Appreciate that. All right, just a couple of minutes away from the closing bell. Let's bring in Jared Blickery to break down the action.
Hey, speaking of midlife crises, look at the Dow outperforming here. It's up 0.5%. The Nasdaq is down 0.5%. I say this with a little bit of jest, but there's something real going on. Maybe a little bit of a trend change. So the Dow for the week just barely negative. The Nasdaq off about, what is this, 2 1/3%. But let me just show you inside the market today. We're talking about energy as the only big outperformer. Now we see some other sectors into the green. Utilities nicely up 2%. But you take a look at the Nasdaq, well, something else going on here. With that big lift miss earlier today, I think a lot of the best performing stocks this year, and I'm going to put an equal weighted chart of the Nasdaq on, are actually doing the worst today. So I think it's just a profit taking is kind of a lazy excuse a lot of times, but I think it's apropos today. Maybe a sea change. Look at Peloton up 74% for the year, Tesla up 59%. Then you change it back here. Most of those top line names that were doing very well are doing very poorly today. Here's Peloton, the worst off today. You take a look at what's happening in disruption. We can look at the ARC components here. Zoom down 3%. We haven't talked about that in a while. Roblox down 4%. Coin down 3 or 4. And then you take a look at the semiconductor space. This is not a fringe market, but NVIDIA, probably the leader in that group. Tons of AI headwinds, or tailwinds, excuse me. That stock is almost down 5%. Why don't I just go to what's happening in the AI space? That got a lot of love last week and early this week. On a 5-day basis, most of these stocks in the red that we're doing last week, a couple of these are bucking the trend there. Sound is up 40%, but I think you get the idea here. A lot of these stocks are simply giving back some of those gains. So does it lead to a sea change? We'll have to see. But on this note, I want to take a look at the travel reopening space. We got Booking and Airbnb down about 3% and 5% respectively. Expedia down 8%. We did mention China. I don't think I mentioned China yet. We can look there, kind of on its own track, but Alibaba down 4%, Baidu down 6%, JD down 5%. Coming into next week, and I want to watch those fringe markets and see if they're leading the way.
Well, stocks ending the day mixed. You can see the Dow and S&P holding on to gains. Dow up just about 169 points. S&P in positive territory. Nasdaq alone in the red, off just about 0.6% as I am able to speak here. Let's take a look at the 5-day charts because it's a bit of a different story. All three of the major averages in the red. You're looking at the Dow off just a fraction here, but the S&P off about 1%. Over the past 5 days, you're looking at the Nasdaq also in the red, off more than 2%. Let's look ahead to next week and take a look at what's on the calendar. On Monday, we get earnings reports from Avis Budget Group, Denny's, IAC, and Palantir. All eyes will be on Tuesday when we get January CPI data. We'll also get earnings from Coca-Cola, Marriott, Airbnb, TripAdvisor, and Akamai, Dave.
Wednesday, we'll get retail sales data. We'll also get the NAHB Home Builders Index. On the earnings front. Roblox, Cisco, Roku, Shopify all report. Thursday, another big day. We got Crocs. Oh, I love Crocs. Hasbro, Hyatt, Paramount, Shake Shack, Give Me a Burger, DoorDash, and Applied Materials all report. We'll also get jobless claims and housing starts data. Friday, things are a little quieter, as they tend to be, with earnings from Deere and AutoNation. You good?
I'm good. I'm coughing a little bit, trying to catch my breath here, but we're almost there.
What are you looking forward to next week? I'll start while you catch your breath. I'm torn between a couple of earnings. I love to see Coca-Cola to get a better look at the consumer. Will we still see something like Pepsi where they raise their prices higher than inflation, drop volume, drop demand a little bit, and will they say that they're going to lower those prices? But that's actually number two. Number one is housing. That I want to see about NAHB, building permits, housing starts. That's Wednesday into Thursday. I think the worst is behind us.
I hope you're right.
Housing. I really do. And I think we're going to start to get to see some numbers on that. Although mortgage rates ticked up yesterday, just a bit.
Just a bit, though, but we have seen more activity, at least returning to the housing market. I'll be keeping a close eye on CPI. We know that's very important here for next week. And also a number of the travel names that are set to report. You ticked off a lot of those names: Marriott, Hyatt, TripAdvisor, Airbnb. When you take a look at those surveys, there's a recent Forbes survey out saying that people aren't pulling back on travel despite what we're seeing when it comes to inflation. Taking a look at some of those numbers, 87% expect to travel at least as much as they did last year. 49%, nearly half, want to travel more this year. So we're not, at least from those numbers, expecting to see a pullback in travel for now. All right, well, coming up next, we are kicking off our Super Bowl 57 coverage. We'll speak to the CEO of DraftKings, Jason Robbins, Philadelphia Eagles player Ndamukong Suh, and also many more special guests. Don't go anywhere. We'll be right back.
Hey everybody, Dave and Shauna. We got an hour of big game coverage coming for you. The quarterback matchup, Jalen Hurts versus Patrick Mahomes.
And we are talking to Ndamukong Suh of the Eagles. A huge game on Sunday. He'll obviously be involved with that. We'll talk about the game, also his investments. Fun fact, he's buddy-buddy with Warren Buffett.
And one analyst says Apple could win the Super Bowl. We'll tell you why. Also, how much it costs to go to the game and stay home, even to buy those chicken wings.
Yeah, those prices are racking up there. And also the number of people expected to bet on the Super Bowl, 50 million Americans. One of the big prop bets, what's going to be the color of that Gatorade shower? What do you think?
I'm going red.
I'm going orange. I was going to go yellow. Red's a bold bet. I like it. We will see who the winner is.
Hey everybody, welcome into our Super Bowl 57 coverage. I'm Dave Briggs alongside Shauna Smith. Cannot wait for this game. We got a lot coming your way over the next hour. I'm really excited for the game itself, but I wanted you to go first on what you're eyeing in the game or outside the game.
Well, in the game, I'm going to say an overall thing. It's going to be the Eagles, my hometown team. I am very, very excited for them going for their second title in the last 6 years. Specific, Jalen Hurts. Okay. It's all about him. He's got to keep the momentum. I'm excited about that. Aside from the game, the halftime show. Apple is now is the official sponsor of the show this year, taking over from Pepsi. Rihanna's back on the live music stage. I'm excited.
I'm just out of the loop on Rihanna. I'm sorry. I don't want to offend anybody. I just don't get it. But I know she's awesome. I'm excited because, look, I think the Eagles have a far superior roster. I do acknowledge that. But Andy Reid always has something interesting up his sleeve, something you have never seen before. And Patrick Mahomes has that Harry Potter-like wand. He has magic. I think they actually should be a 7 or an 8 point underdog. I think the Eagles are a much better team. But the Chiefs can really surprise you. But I'll be honest, what I'm really looking forward to is my only Super Bowl tradition, my wife's buffalo chicken dip. Ooh. It's awesome. Like, that's all that matters for me on Super Bowl Sunday.
You're going to have to bring over the leftovers on Monday, then.
There won't be any, dude.
Well, maybe you should make a little
I'll be
bit
like
more,
scraping the bowl with my fingers when the chips run out.
I got to get the recipe after this
insane.
show. All right, well, this might be the biggest Super Bowl yet for the gambling industry. Lots to look forward to this weekend. The American Gaming Association releasing its predictions for Super Bowl 57, estimating that about 50 million Americans will bet roughly $16 billion on this year's game. That's more than double last year's total. But our own Josh Schaefer has been looking further into this number, what it really means for the sportsbook operators. What do you got for us, Josh?
That's right, Shauna. So that $16 billion number is obviously a massive number, but not all of that is going to go right to the sports books. So for starters, that number includes both bets placed legally and illegally. It's also an estimate. And if we take a look at last year's estimate, $7.61 billion translated to just $950 million of legal handle. That's according to the AGA's assessment of state data. So less than 15% of last year's estimation ended up as legal handle. Now, the total amount bet at legal books. And then if you have to think about how these sports books make money, right? So you take that handle, that legal handle, that $950 million, and then you subtract what's known as the gross winning margin, or you multiply it by that gross winning margin, which is only 10% on average. Then when you multiply those, you end up only getting $95 million as the total legal handle, the gross gaming revenue, which is what goes back to the sports books. That's the number that ends up getting taxed. And that can be taxed, guys, at about an average of a 20% rate. So they're $95 million, then taxed at 20%. It's just not quite as big as that $16 billion number we like to talk about all the time, but it is still a huge week, Dave. The stocks have been roaring headed into the Super Bowl, the three or four of the gambling stocks here over the last month. So it certainly is an exciting time.
You just took like an extra large pizza and boiled it down to one slice. But
that slice could be delicious. That slice could be absolutely delicious.
And it's still a pretty solid slice. Like
right.
It's a New York sized slice.
That's right.
But the game is not in New York. It's in Arizona. And that's the first time we've ever had a legal sports gambling state host a Super Bowl. What does that mean? What are the implications?
Well, it means that people can bet while they're sitting in the stadium, right? And that's the biggest thing that we're going to be watching. And really what I want to point out here, too, is the tax rate. So Arizona taxes mobile betting at a 10% rate. And why I'm watching that number is because Arizona's probably going to have a higher handle this Sunday than they normally would. They're going to get a 10% rate on that. They're going to get a lot of state revenue, guys. And I'm curious how that leads moving forward as we continue to see gambling grow. Are more states going to want the Super Bowl to bring in a lot of gamblers, get people excited for the game, and get more state revenue. Seems like a decent deal to me.
Where's the game next year? Vegas, baby. I mean,
not a bad place for gambling.
That seems like it'll work out well. Great stuff. 50 million Americans expected to throw down $16 billion in bets on Super Bowl 57. Let's dig into those numbers with DraftKings CEO Jason Robbins. Jason, good to see you, man. 33 states now legal. How big is this weekend for you guys compared to anything you've seen in the past? What are your expectations?
Well, I mean, given the growth of the industry, this is almost certainly going to be our biggest Super Bowl ever. And, you know, hard to know. It's always, we always have predictions around the office going in because it's such a fun time. But one thing we know is it's going to be a big day. We know it's going to be our biggest customer acquisition day. And we're all excited to see the results. By the way, I heard in the other set, you're betting on red for the Gatorade. Did I hear that right?
Do I have the wrong color, bro?
Listen, I don't know, but somebody told me, and you should verify this because I did not verify it myself, that there's never been red Gatorade poured on the winning coach in the Super Bowl. So maybe this is the year, but just a little hot take for you to check out. And I could be totally wrong on that. That was something somebody told me, but you should check that out.
Betting scoop. I appreciate that, buddy. That is solid. I had my eye on like an Eagles green, so I'm going to have to look at the odds here on DraftKings.
I was like, geez, I think I picked orange. Hopefully my odds are a little bit better than what Dave is facing right now. But Jason, you talk about the popularity of sports betting. Certainly we have seen massive growth over the last several years with the Super Bowl in Arizona, like we're talking about, the first state with statewide legalized sports gambling here. In terms of the number of users that you are expected to add, can you put a number on that?
We can. I mean, we actually have earnings next week, so I got to be careful about saying anything like that. But also, it's just tough to predict. I mean, so much comes in towards the end in the last day and even in the last hours. And so hard to say, but I know that we think it'll be our biggest day ever, and that's been the case for the last 4 Super Bowls since legalized sports betting as well.
Jason, I'm curious what you're seeing out of the live betting space. Obviously, I think it being in Arizona probably helps, right, with people being excited while they're at the game to probably bet during the game while they're sitting in the stands. I know often we talk about that Europe number, right, maybe getting to 75% of all bets or all handle being in that live betting space. Do you think we eventually get there, or is that where things are headed? How have you sort of seen those trends?
You know, live betting continues to increase. I think whether we get there or higher or a little low, I don't know, but I think it's going to continue to grow. I think more and more people are starting to see that you can make bets during the game. And that doesn't just mean things like what's the next play or something like that. Some people decide, hey, maybe at halftime they want to double down on the bet they made before the game, or maybe they want to, you know, switch sides or something like that. So lots of options throughout the game. We also, you mentioned Arizona. This is the first year since legalized sports betting outside of Nevada that you will have a Super Bowl in a state with legal sports betting. So really excited to see how that plays out. I agree with you. I think it's going to have a tremendous halo effect on the state, because not only the people at the game, but all the people that are in Arizona that know that Super Bowl's here and are paying attention. And we're doing everything we can to let all the people coming in from out of town know, hey, while you're here, you can make a bet. And I think you're going to see a lot of fans take us up on that.
Yeah, that is interesting. And next year it'll be the second in a row because it's in Vegas.
Yeah.
But in terms of the big picture, certainly all the momentum is on the side of sports gambling. But those 3 big states are out there, California, Texas, and Florida. What went wrong in California, and when do you see any of those 3 states turning legal?
Well, I mean, California, it's pretty simple. We had over $200 million in opposition spend against us. I think, 8 times, maybe it's close to that, the next biggest opposition spend of any campaign. So, we were literally attacked with a barrage of ads, many of them pushing false narratives, but not much you can do in a short cycle, and people hear what they hear. And unfortunately, I think some incorrect facts got out there. So, I think first we're going to try to work with the tribes. Obviously, that's a much easier path than trying to fight them. And nobody wants that. We actually had in our ballot initiative revenue going to the tribes. We had tethering to the tribes. Everything had to flow through the tribes. We're going to hopefully get another year, I guess 2 years from now. 1 year from now, we're going to be able to potentially take another shot. And I think we have to learn from last time and educate a little better and be smarter about it. So we'll see on that one. Texas is in play this year. I think there's a live bill that has a decent shot of advancing. We'll have to see. Obviously, a lot to play out in the legislative session. So I think those are the two biggest states. Florida, you mentioned, also, a tribal state, so it has some of the same dynamics. But in that case, it's really one tribe, the Seminoles. So, trying to figure out a way to collaborate with them, I think. And hopefully that's where the industry's going. There's just more collaboration, and everybody realizes that a rising tide will lift all ships. And I think that's something that we're seeing slowly but surely to try and move towards, but still a lot of work to do there, and especially in those big states. They're big prizes. So there are obviously going to be a lot of interest and a lot of stakeholders.
All right, Jason Robbins, CEO of DraftKings, always great to have you. Thanks so much. Have fun this weekend.
Thank you so much.
All right, well, Arizona, like we've been talking about, is hosting this year's Super Bowl. Hundreds of thousands of fans are already there, getting ready for the big game. Yahoo Finance contributor Kevin Cirilli is doing just that. And Kevin, I know you spoke with a lot of key voices down there. I got to say, I'm very jealous. I wish I was in your shoes right now. Give us a lay of the land. What's it like down there in Arizona right now?
Well, when the plane landed at Sky Harbor, I thought I was in Ireland because all I kept seeing was green. There are literally, I've seen like maybe one or two Chiefs fans, but it's all Eagles fans everywhere. So, I feel like I'm at home here in sunny Scottsdale, Camelback Mountain behind me, if you know the area. Look, I was at the Phoenix Open, the Waste Management Open earlier this week, which has really become a business-private partnership, public-private partnership, really a hub that Jack Selby, who's the managing director for Peter Thiel's family, and he's got his own venture capitalist investing $110 million here in the state. He started this thing, and it's really gone global. And one of the folks he was able to get out there was Governor Katie Hobbs, the newly elected Democratic governor of Arizona. And she noted the economic impact that the Super Bowl, that the Phoenix Open, that's having on this state. Take a listen to what she told me on the 17th hole.
It is huge. It is huge. We have 160,000 workers in our tourism and hospitality industry that are ready to welcome the visitors that are already here, making sure they have a great experience. That gets return visits, and that helps our economy. The last time we had the Super Bowl in 2015, the economic impact was over $700 million.
$700 million.
Yeah,
wow.
With over 100,000 visitors. So we're expecting to top that. And the lasting benefit to our economy, because we've become sort of, we have a great track record with these kind of big events, and it's just going to attract more of them in the future.
So when you look at the numbers, last year alone, $24.2 billion worth in the sports and tourism industry contributed to Arizona's GDP. They're expecting that the Super Bowl alone will increase that number to more than $1 billion. So you could see a 5% increase in that regard. But a lot of economic development here outside of sports, the semiconductor chip manufacturing that's being conducted here in the state, something that President Biden talked about in his State of the Union address earlier this week. Remember, Intel, TSMC building their fab factories down here. The governor's excited about that. Jack Selby's excited about that. A lot happening. They're trying to give Austin a run for their money.
All right, quickly, I know you're a big fan. I know you think Philly's going to win. Give me a score, and what's the particular edge you think that Philly has over KC?
All right, well, you're one, the fans. That's the edge, clearly. Two, they're going to essentially be playing in a home stadium. And three, I'm thinking it'll be 27-24 Birds. I do think it's going to be a nail-biter. I heard you compare the Chiefs to Hogwarts, and I got to say, that is not the case, okay? Like the Eagles are Gryffindor. Let me just put it that way. How's that?
First off, it was Patrick Mahomes is Harry Potter, has a bit of wizardry to him. Let's get it straight, Cirilli. All right?
Okay.
Good luck, brother. Enjoy it out there, okay?
It. It's awesome. Awesome. I'll talk to you guys later. Thank you for having me.
All right, we're going to be taking a look now at some prop bets. Through the hour, our Josh Schaefer. He is our resident junkie gambler, and he's going to break it down for us. I need some prop action, so what do you got?
Right, we got some fun ones here for you guys. We're going to start with Gatorade, which sounds like it's a hot topic for you two. And I'm not going to lie. Where did we pick? Who had red? Someone had red, right?
Well, I took red, yeah.
All right, you're with 8% of the handle here. That's plus 450 odds, Dave. So what you're looking at is where people are betting. So the most bet on Gatorade is yellow. 40% of the money is on yellow. And then you got 20% of the money on blue, 20% of the money on orange.
That's my pick.
My pick, I got to step out of the way here, is purple. Because I think Riptide Rush is the best Gatorade. And that's simply all I'm picking off of. There is some fun stats if you guys want to go deep into this, right? Orange is the most picked. That's probably why Shauna picked it. It's come up the most times since 2001. And then yellow is also very popular right now among Eagles fans. So yellow was poured on Doug Peterson at the NFC Championship and the Super Bowl the last time the Eagles won. And Nick Sirianni, 2 weeks ago, had yellow Gatorade poured on him.
I love that
really
flavor.
like yellow.
That's a solid scoop. There's some of these colors, Josh, that are a little bit in between. That there's like a greenish blue. You know what I mean? The greenish blue Gatorade.
Well, we got yellow green.
I don't know. I'm looking at it.
You're going to have to call back up Jason Robbins, I think, on Monday.
You're going to be the one that's disputing the color of Gatorade.
What color you had. Because yellow green is the only unclear one here. You got red pink.
Yeah, that would be pretty clear.
Pink.
That's going to be a tough one to argue with.
That's why I'm going with purple.
Okay.
It's simple. I don't know if it's ever
I'm
happened.
going orange.
But I'm going purple.
Okay. All right. That's a good job.
All right. Coming up, Eagles defensive tackle Ndamukong Suh, who competes for his second Super Bowl ring on Sunday, also boasts an impressive investing portfolio. He'll tell us more about it next.
No shortage of storylines ahead of Super Bowl 57. We've got the first ever meeting of black quarterbacks, the first ever meeting between two brothers in Jason and Travis Kelce, and the third Super Bowl with three different teams for one of the greatest defensive linemen in NFL history. I'm talking about Eagles five-time All-Pro defensive tackle Ndamukong Suh, who joins us now. Great of you to find the time during this busy week, my friend. So three teams, three Super Bowls. What makes this experience different for you?
The experience is each and every single year is different, no matter what team you're with, whether you've been with the team for 10 years or 2 years. Every year is different. Every team is different and always going to continue to be that way, unfortunately, but that's part of the business. But it's exciting to have an opportunity to get back to the Super Bowl and have another opportunity to win.
And Ndamukong, it's great to see you. You're playing for my hometown team, so I'm clearly rooting for you on Sunday. You're playing this time for Nick Sirianni, who's not that much older than you from your time with the Eagles this year. What have you learned from him just in terms of the leadership and his success that he's clearly having so early in his career?
He's a great coach. Having played against him last year in the playoffs when I was down in Tampa, and we took care of business that first round. But he's a great coach. He understands all the different nuances, has an opportunity to be a lead on the offense side of the ball, but also understand the defense and how he wants to particularly rush up front and get after quarterbacks. And I think from the standpoint of his leadership, he just understands it's all about keeping detail-oriented process, focusing on the things that count the most when it comes to situational ball, and going from there.
I mentioned that quarterback matchup, which is so intriguing. Tell me about the key to defending, to stopping, to containing Patrick Mahomes. And if I could ask a double, you shut down your quarterback, Jalen Hurts, this time last year, a bit earlier. How much has he grown in that 1 year?
Yeah, we'll start first with Patrick Mahomes. He's a great talent, very, very elusive, to say the least. I haven't gone against him in years past, but most notably in the 2020-21 Super Bowl that I won with Tampa. He's just always extending the play, and that's something as a defensive line that we have to focus on. There's no end in rushing until that ball is either incomplete or you've got a sack and he's fully down. You got to keep rushing because he loves to extend plays and make things happen and giving balls to his receivers, especially 87. And so when it comes to transitioning to Jalen, I think Jalen has grown tremendously. He's found a way to not only hurt people with his feet, but as well as his arm. And I think the GM, Howie, did an amazing job defining great talent around him and adding some pieces, for example, A.J. Brown.
Boy, has he come a long way in just 1 year. Speaking of, you've come a long way over your career. You were once voted the dirtiest player in the league. You've been fined more than $600 grand. But recently, you played peacekeeper against the Niners. How do you think you have evolved over these 13 years, or were you just misunderstood?
I've always said it. If people ever take the time to really get to understand me and get to know me, and really truthfully be unbiased when it comes to my personality and my character, they wouldn't have made those votes and they wouldn't have had that particular characteristics around me as a person. I've always been some sort of a peacekeeper, or if you want to call it that, but I know Trent well. So when he saw me getting in front of him, and it wasn't about anything other than the game is pretty much over. Let's move on. Let's get to the next play and go from there.
You've clearly had a lot of success on the field. You've also had a lot of success off the field as well. I know you have invested in over 30 companies. One of your mentors is actually Warren Buffett. Talk to us just about that relationship, the biggest lessons that you've learned from him, and how that's really helped shape your investment career.
Yeah, I think the biggest thing that I've learned from Mr. Buffett is just being able to have good people around you. And as you see, he has multiple companies. He trusts those folks and puts them in places and empowers them. And that's something that I like to do, not only in my foundation with my family and my wife, but also being able to be able to empower people, whether it's in the real estate realm, having a development company, being able to build multifamily housing, being able to take care of other people, and finding ways to find affordable housing for folks that should be afforded to them at all times. And it's tough in this day and age, especially going through the pandemic. You saw that it's probably its worst. And so hopefully we can continue as a collective to get better in that space. But when it comes to investing, I just have fun with it. I love learning, love being able to sit down with folks. I actually sat down with one of our owners yesterday to have a great conversation of how he built his company in KKR. I've done some work with them. And so it's a fun opportunity for me to just be able to build relationships and learn some folks, and then being able to be involved and be hands-on.
You mentioned your involvement in real estate there a moment ago, some of your initiatives, how you're looking to tackle housing affordability. From your perspective, from your involvement in this space over the last several years, what more do you think needs to be done, and how do we better address this issue?
Yeah, I think I think one of the key things that we could do, especially when it comes to affordable housing, is kind of take it out of the city and state's hands. If we privatize it in a manner to incentivize private real estate people, it'd be great. I mean, because if you really look at it and break down the numbers from a perspective how I look at it, it's one of the most expensive housing just because of the rules and regulations that go into it, which I understand and respect. But if we potentially looked at it being privatized, I think it would be a lot faster. And to be able to be something that is afforded to people a lot quicker.
You're involved in over 30 companies here. I think a lot of people at home are asking, how do you have the time for this? How involved are you with each investment?
Yeah, I think I'm very, very involved each and every single day, finding time to be able to do it. But it's really being able to compartmentalize things. Obviously, playing football pulls me away from it a fair amount, but I've been in it for 13 years, understand how I need to study, how I need to focus, even going into a very important week like this week with the Super Bowl. I can still look at things. I probably won't as detailed and push it off just a week or two, but for me, I still look at opportunities and find time to do it. And I think one of the greatest things that helps you, keeps you sharp, because if you get overloaded in one particular thing, then you don't have the capacity to go and look at other things and find ways to keep your mind sharp when it comes to playing football and knowing what you need to accomplish.
That is a super sharp man and a likely future Hall of Famer in Ndamukong Suh. Well, if you don't have a ticket to the Super Bowl, you're not too late, and the trends are, in fact, going in your favor, so maybe be patient. You will, though, have to shell out a ton of cash to go to this game. We're taking a look at the prices all through this week. The cheapest ticket selling for $4,300. That was Monday, according to StubHub, but that number gradually declining through the week, the opposite trend that we usually see, dropping $200 Tuesday, a huge drop of $500 on Wednesday, and we're finishing out the week with the cheapest ticket costing $3,100. Still a ton of cheddar, but it's come down considerably from the beginning of the week. All that data is for the cheapest ticket to the game. That's in the nosebleeds. If you want the good seats, if you want to bring a friend that you're trying to impress, you got to really shell out. And here's the cost. You can sit in section 138M, row 44, main end zone. Tickets are a cool $87,000 each. So you and a friend will pay over $174,000 to see the game. You better, well, we won't go on. Some other trends we're watching. Eagles fans are outselling Chiefs fans by more than double, according to StubHub. That fits what we're hearing from Kevin Cirilli on the ground in Arizona. The ticket vendor seeing a last-minute sales spike in Mexico, the number 2 top-selling country outside of the U.S., behind Canada. And most U.S. buyers are coming from these 5 states. No surprise, Pennsylvania, California, New Jersey, Arizona, and Florida. Chiefs fans in Missouri and Kansas accounting for a combined 8% of sales. What's going on, Chiefs fans? You got a couple of days to try to change that dynamic. Coming up, Apple will be in the spotlight at Super Bowl 57. Find out what a big Sunday could mean for that company. And we asked you if Rihanna will bring out any surprise guests during the Apple-sponsored Super Bowl halftime show. Roughly 60% of you said yes. We will discuss coming up who that might be. Some of you made predictions. We've got A$AP Rocky, Miley Cyrus, Jay-Z, even Beyonce is possible guest. More on what else to expect coming up next.
A huge part of the Super Bowl is the halftime show, with many people tuning into the game just for that big performance. This year, Apple is the official sponsor, and Rihanna is taking the stage with her first live performance in years. I know I'm very excited for the game. Ali Canal is very excited for the game. She's on the set now. You don't have to look any further than that jersey that she's wearing for who she's rooting for this weekend.
She's chair dancing,
She's
man.
chair dancing.
I'm like in such a giddy mood.
Yeah.
I'm so excited.
There we go. We're ready.
Yeah,
We might have
Lots
talked
of
to Ali
hype.
on Monday. I don't know.
Lots of hype here. All right, Al, let's talk about the halftime show, right? Because lots of money going into it, lots of hype ahead of this show. What can we expect, and how expensive is it for these musicians?
Well, the NFL, famously doesn't pay the halftime performers, but it does pay for all the upfront costs. So think about the stages, the background dancers, the lighting. That's all the NFL. And that could amount to a pretty hefty price tag, around $17 million. That was a reported cost for last year's show. Riri, she's going to want the production value. It could be even more for that. And for Rihanna, she was asked to do the halftime show back in 2019. She said no in solidarity with Colin Kaepernick. Now she's back. She said she's ready for this moment. She's apparently changed her set list 39 times. Yeah. So I am ready for this. And it's going to be very big for her in terms of her streams on those music platforms like Spotify, like Apple Music. If you take a look at the past, last year's performance, which featured Dr. Dre, Snoop Dogg, Mary J. Blige, Kendrick Lamar, Eminem, and 50 Cent, each and every one of those performers saw a boost to their personal catalogs. Dr. Dre saw a 183% increase in album sales, a 105% bump in on-demand streams. Mary J. Blige, her album sales jumped almost 1,000%, with Snoop Dogg's rising 361%. And then if you take a look at the 5 years prior, we have The Weeknd, J-Lo, Shakira, Maroon 5, Justin Timberlake, Lady Gaga, all an uptick in digital downloads, album sales, Spotify streams. So the exposure here is unbelievable. And that's really why it's worth it for a lot of these artists. And we've seen an uptick in the amount of viewers that are actually tuning in and watching this halftime show. Last year, for example, viewership was up 7% compared to 2021, with more than 130 million people tuning in. So we'll have to see if Rihanna can get those numbers up even higher, which I think she can.
Do you really?
I do. People are excited about this.
I know. I'm excited. Don't get me wrong. A lot of people want to know opening song and special guest. We've seen a lot of that in recent years. What do you got?
Opening song, I got Run This Town. That just feels to me like an opening song. Special guest, I think it has to be Jay-Z. Jay-Z's Rock Nation is a producer of the halftime show. Rihanna's also signed to the Rock Nation label, so I feel like he's gonna help out his girl. He's featured on a lot of her songs. So that's my prediction. That's where I'm going with.
We're gonna go around the horn real quick. I'm gonna go totally outside the box. I think she is unconventional. I don't think she's going to do anybody predictable. It's going to be a country star. It's going to be like Zach Bryan or Zach Brown
Chris
Band.
Stapleton stays after the national anthem?
Ooh, that'd be amazing. My favorite singer of all time. But I think somewhere, Sugarland, someone like that. Unconventional brings in a different portion of audience.
I've got to agree with Ali. I was going to go Jay-Z before we even heard her pick. I think that makes the most sense. We know he has shown a little bit of resistance against the Super Bowl halftime show in the past. I would not be surprised if we see him on that stage on Sunday.
They always make fun of on the sports shows when everyone picks the same team, right? And we all have the same little icon on the bottom, because I'm going to pick Jay-Z too. So that's when they normally say that's not going to happen. But I don't know. That's my favorite song. Run This Town is my favorite song. Jay-Z is obviously very involved, as Ali said. So that was my pick before everyone else picked. So we got to stay with it.
I like Umbrella.
Wow.
Predicting Umbrella. I think that would be the finale. I could see a bunch of umbrellas out there.
Yes, exactly. It could be a good one. We'll see.
Like
Clearly, we are very excited for the halftime show. Dave, you got to jump on board here. You know?
I am, man.
We're going to get you to become a Rihanna fan.
Dave is a boomer.
Sooner rather than later.
That's when I get my buffalo chicken dip, man. Whatever.
All right.
I'm here for the game.
Okay, boomer.
Right, Al, thanks so much. Well, Apple, like we've been talking about, replacing Pepsi as the official sponsor for this year's Super Bowl halftime show. $250 million deal spans 5 years. This is according to the Sports Business Journal. Let's discuss what this means for the tech giant. For that, we want to bring back Dan Ives, Wedbush Managing Director and Senior Equity Analyst. Dan, it's great to see you here. So clearly a huge move for Apple, now being the sponsor of the halftime show. How big of a win do you think it is for the company? Dan, I think you're muted. And we love the Eagles jersey, by the way. Got it?
Okay.
There we go.
So part of what Cook and Cupertino are focused on is really on the NFL and live sports. And this is an important part of ultimately what we see Apple doing more and more of over the coming years. I think it's a huge win, and especially in this macro period, Apple doing this further flex the muscles.
Dan, when it talks about Apple here going forward, I think lots of questions just about the amount of money that they have spent or are going to spend on the halftime shows over the next several years. When you see that, does that make sense for them, given the fact that there's no guaranteed return on this type of investment?
But Apple, they're tacticians in terms of how they spend. And this is something they don't just do quickly. And if you look at the history, I mean, they have basically made big bets that have been home run successes. And I think at this juncture, it's very important that they're investing at a time where some others maybe are pulling back. And I think that's an important time, especially going into more iPhone launches as well as some other technologies I'd expect them to introduce over the coming months.
You thought they were going to take a big swing at the Sunday NFL ticket package. What happened there? Did they end up making a bid? Did it just get out of the range they wanted to spend? And do you think they'll take another pass at an NBA, NFL type of property?
Yeah. And look, I think they were significantly involved in that. I think some reports have talked about it. I just think it got to a point where they're only going to spend a certain amount. Ultimately, they were not going to go to that level. But live sports is the key to streaming. I mean, that is one of the keys for Apple when it comes to the streaming piece. I don't think they're stopping here. I think they're going to go after major sports over the coming years. And you look at that content strategy, I mean, it just further highlights whether it's streaming in terms of on the TV or what we see with Apple Music, services under the radar has actually morphed into a pretty massive business.
How much will live sports mean for this tech battle? We just discussed Apple. You've got Google, who made the big play for Sunday NFL ticket, $2.5 billion a year, rumored to be per year. And then Amazon, of course, already in with Thursday Night Football. Or is it not that important in terms of the overall growth investor story?
I think it's a golden jewel. I mean, in terms of what big tech's focused on with streaming, live sports is what is ultimately, and that's why the value continues to go up, because it's not just traditional media. And I think big tech is going to take significant bets on live sports over the coming year, especially as you look into 23, 24, 25, 26, a lot sort of come up for renewal. And I think streaming is going to be a big part of that over the coming years.
Dan, we don't have to ask you who you're rooting for. Very clear. Got to ask you about the score. What do you think it's going to be on Sunday?
I see Eagles by 10. I think ultimately, I think between Hurts and that defense, I see a lot of happy fans in the 215 area code.
I hope you are right. 215 area code is my hometown. Dan Ives, great to see you. Thanks so much.
Thank you.
All right, Josh has another bet that he's watching over there. What do you got now, Josh?
All right, guys, we got the coin toss now. You can bet on a 50-50 coin toss. I know, how exciting, right? But people will do it. And we asked our viewers what they picked, and they like heads. We had 55%, or just about 55% of people say that they would vote heads or bet heads. But then when you look actually at where the money is right now at a place like Caesars Sportsbook, the money's on tails. 58% of people betting on tails. You can see the odds right there, -102 and -102. Of course, even odds, because again, it's a 50-50 bet. Now, if you want to go fun stats, 4 out of the last 5 Super Bowls were heads.
Okay. That is nice research.
So I don't know if that makes you think your tails is due, or if heads.
What would
is
you
hot,
bet, Josh? What
I would go heads.
You would go heads?
Yes.
All right.
In a former life, I did the coin toss all the time. I always went heads. You got to play the same one every time. I think that's the strategy on a 50-50.
Real quickly, I want your pick with the spread. It's Philly by 1.5. Who do you got?
Dave, I have a lot of bets set up. Why don't we talk about that in about 10 minutes?
Yeah, all right.
Coming up next, the Super Bowl ad landscape is getting a makeover. Find out why sports betting platforms like FanDuel could be a winning bet on Sunday.
called the Kick of Destiny.
What the heck is Kick of Destiny?
Good luck. See you in Phoenix. Don't miss.
Oh, boy.
Oh, it's going to be live. 45-yard field goal for Gronk. FanDuel's Kick of Destiny campaign starring Rob Gronkowski, getting plenty of buzz ahead of the big game. Who else is getting banged for their $7 million? John Connors is the co-founder and CEO of marketing and communications agency Boathouse. He joins us now. John, good to see you, man. So last year was labeled the Crypto Bowl. How significant a presence is gambling making? Did they replace crypto?
Yeah, I think to your point, this year is going to be the booze, chips, and gambling bowl all combined. And I love the fact that you led with Gronk.
Well, speaking of being the booze, chips, and gambling bowl, let's talk about the gambling aspect of it with the booze, because Molson Coors is back in the Super Bowl after more than 30 years. They're teaming up with DraftKings. And what's interesting about this initiative is that they're allowing users to bet on who they think, for example, what beer is going to appear first, what dog is going to be used in the commercial. From your perspective, just the engagement aspect of this, how smart is that? And what do you think we'll hear from other alcohol brands this Sunday?
Yeah, I mean, I think to your point, it can't separate gambling from the Super Bowl, right? And so the ability to kind of make that brand connection and to get that engagement, these days everyone's trying to figure out how they can drive up that engagement value, how they can drive up that social value, how they can drive up the conversation. And so I think FanDuel and DraftKings have done masterful jobs sort of between the Gronk bet and the betting on Coors Miller and all the other pieces of driving up as much conversation as possible.
Yeah, the live element of the FanDuel ad, have we ever seen anything like that? And how big do you think that will pay off?
I think we've seen things like that, but not in the Super Bowl, right? So I think at this level, I think you've seen a lot of categories try and launch a lot of new ideas all the way back to Apple 1984. It's always a massive platform for new launches. And I think as those two try to exchange blows to sort of, capture attention, capture volume, I think it's a masterful play.
Well, John, for the big ads, they're pricing out just around $7 million for 30 seconds. We're seeing many companies team up like we've been talking about. One, GM and Netflix in this ad starring Will Ferrell.
General Motors is going electric, and Netflix is joining in by including more EVs in their movies and shows. It's the least they can do.
So if you're going to get swarmed by an army of the dead, why not get swarmed in an EV?
No! I said no biting. Or if you're being voluntarily kidnapped, why not be kidnapped in an EV? What's that scent? Is it pine?
So GM teaming up with Netflix, trying to push their EVs, take them more mainstream. What do you think of this strategy, a big streamer teaming up with an automaker?
I think you're seeing, well, last year's automakers were an interesting strategy. It was majority electric vehicles when none of them had the electric vehicles yet. So they were all teasing sort of what was coming down the road. I think you're seeing that collaboration piece across the Super Bowl this year. I think, the marketers like to follow the artists, and the artists have been doing collabs for a long time. And I think we're just seeing a significant number, as you know as well. There's a little more safety in the collaboration. Sort of two teams, two big brands like Netflix and GM going at it together just drives a little bit more safety for their chief marketing officer.
All right, John Connors, thanks so much for joining us. I know a lot of us are very excited for all the ads that we will be seeing in just 2 days from now. Well, coming up, the Super Bowl indicator will tell you how stocks may perform next week based on the big game's outcome. Stay with us.
Welcome back to our Super Bowl special here on Yahoo Finance. Normally we talk plenty about market indicators on this show, like 100-day moving average or how stocks perform in election years, but some say even sports can tell us where Mr. Market is headed over the next year. Ryan Dietrich over at Carson Research recently released the latest data for what's known as the Super Bowl indicator, which tells us how markets perform depending on the outcome of the big game. So let's keep it simple to start. Markets have historically performed better after a team from the NFC conference wins than if the AFC wins. You can see here that's 10% for the NFC, an average return, 6.9% for the AFC. So really, people should be rooting, per this indicator, for the Eagles, who are in the NFC. That would give us a better return per the data. Now, that was a historical chart, of course, going all the way back, including all outcomes. But both these teams have also won Super Bowls in the past. So the Eagles have won one Super Bowl. It was a couple of years ago. And the S&P 500 fell 6.2% that year. The Chiefs have won 2 Super Bowls. When you average those together, that's up 8.1%. So not a lot to take there, only 3 games. I don't think that's my favorite one. Let's get to my favorite one. Market bulls should really be rooting for a blowout on Sunday. So if you take a look here, the average return of the S&P 500 is 8.5%. Now, when there's a single-digit win in the Super Bowl, it goes up 4.9% on average. When there's a double-digit win in the Super Bowl, it goes up 10.9% on average. But when there's a blowout and someone wins by 21 points or more, there's a blowout in the markets too, and the S&P 500 rises on average 13.6% that year. So I don't know about you guys. I might root for an Eagles blowout on Sunday.
Heck yeah.
Maybe my 401k can recover from last year a little bit.
Philly fan here is going to root for that. That will not happen. They could have a comfortable win, but not a blowout win.
We'll keep that thought.
Where is the public money at?
The public money. Let's take a look at the public money, Dave. So we know the spread is 1.5, right? Coming into this game. Yeah. So the Eagles are favored by 1.5. And the public money right now is on the Eagles. So 69% of the handle on DraftKings Sportsbook is currently on the Eagles to cover that 1.5 point spread. So that means they'd have to win by 2. And then what I really want to bet on Sunday, I think, because I love the totals, is 51. So 51 is the total, and that's where people are betting right now. Here's my favorite bet, though. Travis Kelce first touchdown. I bet it earlier in the playoffs. It hit. I love the first touchdown bets. It's really exciting to watch the first couple drives and see it. Plus 700. I'm all over it, Dave. Shauna, what are you watching on Sunday? Give us a bet. You got to give us a pick.
All right, well, I went in with a parlay, and I stole this from Ross Tucker, full disclosure, but I got to give credit where credit's due, and I liked it. I liked it a lot, so let's talk about it. I think Jalen Hurts is going to score a touchdown. I think Hassan Reddick is also going to get a sack, and I also think that the Eagles are going to win, and I'm confident in it.
Yeah, Tucker's a pretty good gambler. He's no dummy. I've got a dumb bet because these are dumb bets. When you have multiple things that have to happen. Patrick Mahomes over 1.5 touchdowns. Travis Kelce over 50 yards. A.J. Brown over 50 yards. Devontae Smith, receiver for the Eagles, under 63.5 yards. And Jalen Hurts over 40 yards rushing. Full disclosure, I also stole mine from a 15-year-old who lives in my house. But he's pretty good at this.
It seems like we bet a lot on the ankle injuries there and the lower extreme. Like, how healthy is Jalen Hurts? How healthy is Patrick Mahomes? To talk football a little bit, I'm nervous about some of those prop bets there.
Yeah, you don't like it? You don't like it? Well, look, the thing now, I say a dumb bet because those have such tremendous odds that they lure in a lot of people because they pay off well, but no one ever wins them.
They have the highest hold rate for sportsbooks, too. Sportsbooks want you to bet those same-game parlays because they make the most money off of them. But coming up, we're talking about inflation. It's crashing your Super Bowl party. Find out how much you'll need to shell out for food and drinks when we come back.
What good is watching football if you don't have a bevy of snacks and also drinks to enjoy during the big game? But this year, you got to keep a very close eye on that price tag, because when it comes to checkout, some fan favorites are much pricier than they've been in years past. Allie Canal joining us now with a closer look at what we will be paying this weekend. Allie, what do you got?
Well, the good news is, Shauna, if you want some chicken wings, which we have on our set now, that's actually cheaper, 22% cheaper compared to this time last year, $2.65 versus $3.38 per pound the week of Super Bowl 2022. And that's due to a larger supply of wings, decreased freight costs, all of that driving prices lower. And if you want to get a little bit fancier than wings, we have sirloin steak prices. That's also down by about $1 per pound. I feel like you maybe are a steak guy. Philly cheesesteak, maybe?
Not during the Super Bowl.
Philly cheesesteak, though. I think that could be an option.
You can't have a steak during the Super Bowl.
I know. So you probably want to stick with the wings plus 22% versus, versus the $1 less. I think you go with the wings here. But chips and guac, avocados, they're also down, which is nice. But something that's up is your beer. 11% higher.
Wow.
And they've seen demand slip because of that towards the end of the year.
Yeah, and I think it's interesting, too, that soft drinks as well, they're up 25%. So it's actually cheaper to get a little buzz going than to stay sober during the game. But we were talking about...
You needed another reason to go out and get a drink during the big game.
In the spirit of that. But talking about spirits, though, that's actually only up 2%, while wine is up 3%. So maybe a little sangria action if you don't want the beer. That's a cheaper option.
Not bad.
But overall, I think for the Super Bowl, people want to drink their beer.
Wings versus boneless wings, Allie. You are the expert. We have them both here. Shauna and I are team boneless.
We are.
I'm not team boneless.
We're on an island by ourselves.
I'm bone-in, but I'm flats over drumsticks all day.
Oh, yeah.
Yep.
What about you?
Baby.
No, I'm absolutely bone-in. I am of the take that if you have boneless wings, they're actually
that just looks sad.
Those are chicken nuggets. Those are chicken nuggets.
Oh,
those are
Josh,
chicken wings.
I will eat them
Shauna,
all to
Allie,
myself.
thank you guys. That'll do it for our big game coverage. Enjoy the weekend. Enjoy the Super Bowl, and we'll see you on Monday.
Go Birds.